Hello everyone, my name is Gnana Raja. I'm a nutritionist, fitness consultant, wellness coach, and Chairman's Club member from Herbalife Nutrition. And with my 20 years of experience, I would like to present you one of the wonderful videos on living debt-free life. Very interesting video. This will be great help for many of the people because this has a lot of implications on your finances and your work life and how to live debt free. Okay, very interesting video. So to understand this video takes about 1 hour time. So please be patient and have a clear cut watch. And before this video, so let me give you a small disclaimer that you have to follow your own consultant on financial matters. This is just like a general information about your debts and how to live a debt free life, right? So before that, let me explain, before the video starts, so let me explain about myself. Let me introduce about myself. I was a former district registrar, group 1 officer, worked in the government of Andhra Pradesh for 10 years, then 15 years. I worked in public sector also, government and public sector together, and including 3 years of my service as a consultant in Center for Good Governance. So I'm a nutritionist, fitness consultant, and personal wellness coach working for last 20 years. I'm also Chairman's Club member Herbalife. I am a finalist at civil services, and I appeared up to interview level in IAS exam. So I have this kind of experience. I did my MSc in zoology. Then I also did some certification courses on advanced diploma in nutrition fitness, certified in advanced clinical nutrition, and certified nutrition fitness consultant, certified sports nutrition consultant, certified exercise and specialist, certified calisthenics trainer, duathlete, marathon runner, and cyclist, and CPR AID certified, and Zumba strong by Zumba instructor. Right? These are some of the things, and we give a lot of trainings, and we help a lot of people to get into healthy life and also wealthy life, right? So to reach out to me, these are my Instagram handles, Facebook, website, YouTube, and email, and phone numbers are given. And let me start the video like this. So financial bondage or a debt trap. If you are in a financial bondage or debt trap, so how to understand you're really in that kind of bondage or debt trap? So these are the checklists. Number one, are you paying every bill by credit card and not be able to repay it? So do you put off your credit bill until the next month? Do you borrow money for fixed expenses like rent, insurance, taxes, electricity, etc. by credit card? Do you know how much you owe totally? Do you surrounded by creditors calling? Do you avoid meeting people because you owe money to them? Are you borrowing new loans to repay old loans? Do you or your family arguing or fighting frequently over money? If any of these or some of these is ticked, then you are under some kind of debt trap or financial bondage. Some use credit cards for positive debt or good debt, but it requires expert skills and expertise and discipline. So, what is positive debt? Is our good debt is for investing in the capital assets. So you'll get to know about capital assets and all in the later part of the video. And what are bad debts for spending on household expenses and to maintain lifestyle, sometimes parties, to impress others, and marriage loans, sari wearing ceremonies, stand guarantee for some other loans, right? So these are all bad debts. So some people definitely, they try to invest some money by borrowing loans, and they try to get back that money and again re-borrow and again reinvest. So those are real people. They are that credit is there. That's part of the good debt, but they know how much to have that kind of debt, maybe 10% or 20%, but they don't have a 80 to 90% of debt. Right? There is also a ceiling limitation is there, but they also have experience. They also have a control. Discipline is there. But most of the middle class people and poor people, they don't have this kind of thinking. So that is for those kind of people I'm talking about. This kind of coming out of the debt-free life, right? So how to live a debt-free life? So coming out of the debts. So there are several reasons actually why people end up in debts. Number one, they usually start with the bona fide intentions, good intentions, good reasons like medical emergency. My father became sick and I'm in a hospital. That's the reason I have to take loan. Sometimes study loans for my daughter. I have to, take the loan for her higher studies. Sometimes house loans and vehicle loans, etc. It looks like, good reason, but they don't know they end up in some kind of debt trap. Some wanted to live for now, live for today, enjoy every moment philosophy. So shopping culture, they say, no, you like it, you buy it. I don't have money, but buy it. We'll see later on. So that is again living for today. That's part of shopping culture. Many people just swipe the credit cards. They don't have money, but they just for the sake of fun. Slowly you lose track and becomes out of control. Some buy even if they don't need, just for wants. There are two things are there: one is wants and needs. You can buy for your need, but not for wants, because wants are unlimited. After satisfying some few wants, then again more wants will come. Some are lazy, they don't want to work, they want to other people's generosity. They keep on asking money all the time. So some people are always there. They always ask us. They just lazy. If there is no problem in asking, but if they don't repay and they don't work hard, then big problem. Don't give fish. Teach how to fish. This is very important. That's what we do in our business. So consequences of debt. Debt can be deadly, devastating effect, and it enslaves actually people. Affects credit score and civil score, and it also has harassment from creditors and depression and heart attack, and pull you down to debt cycle. Run away to another city. Some people go away to, they leave all the family members, relatives, everywhere. They go to another city to avoid the debts, you know, avoid the people, uh, uh, avoid the loaning agencies and all that. That will actually hurt your marriage and family also. According to one survey, about 80% of marital problems arise due to money pressures. Even certain times end up in suicides also. In the newspapers, we get to know some people, they suicide to overcome the debt problem. Creditors calling. So always try to pay your credit card bill on time and in full. Set up timely reminders to avoid late payments in future. Sign up auto pay if you frequently miss your payments. Pay at least minimum amount due to avoid late payment charges. So these are, don't be a credit card defaulter. If you become credit card defaulter, what will happen? That credit score will get affected. There is you can see this credit score 300 to 560 is very bad. And in the green color, 750 to 850 is very good, excellent. So what will happen if your credit scores are low? You don't get further future loans, even if it is genuine reason. Okay, then then usually nobody will give you any kind of credit, and usually they try to avoid you. They consider you as you are not a credit worthy person. My story, I also have a story to share about my credit cards. So I also have a shock. When I was government officer, some people came to my chamber and said, "Sir, you are eligible for now." In the initial days, you are eligible for a credit card. I said, "Okay, I'm eligible. That means it's an opportunity for me." Okay, I taken credit card. I started swiping left and right. So then what happened? Sweeping frequently messed up my account. So more, my salary is less, but my account, the money I required to pay back is more. So I did not understand. So I started actually arguing with my family. They are asking me, "Why did you pay?" Said, "I only spent for the business. I am not alcoholic. I'm not a smoker." So they say, "Yes, you are not a smoker. You are not alcohol, but you spend it for the business. But for the business sake, you taken money for the product, but you did not get back your money. I used to give product to the customers at a discount, sometimes free of cost. I don't get back money. So, but here swipe the card and buy the product. I borrow indirectly, right? So then I'm messing up the things. I'm not separating the account. How much really I am owing, and is it really whatever I'm doing? Is it really worth or not? So sometimes you mess up and you argue. Okay, so that's what I did. So what I did is the taking my help of my family members. So I removed all that, credit cards. I made a plastic surgery. Okay, then learned about using real cash in pocket. So I started keeping the real money, leaving about the credit card. Then I started getting the pain when I pay back in terms of cash. Then I know how much is really expensive. If it's a credit card, just like it's like a game. It's like a toy. People spend 30 to 40% more money if it is paid by credit card. So usually end up in paying more. So we end up in spending more, 30 to 40% if it is credit card. If you pay by cash, currency, then you know the pain. Journey of 1,000 miles start with first step. So you start with the avoiding a credit card as a means to pay back your things. Don't get tempted in card swiping. If you just get tempted, that means you lost the control. You don't have discipline. If you cannot control your emotions, you cannot control your money. As per Warren Buffett, Warren Buffett is one of the richest man, one of the richest men in the world. He is known for his discipline and his wisdom. So he says, if you cannot control your emotions, you cannot control your money. Very interesting. So learn to cut, that surgery, the plastic surgery of the credit card. I removed it. So there ends the matter. I don't have it. And we use the credit card very rare and very often when it is really required. That also you try to immediately pay back. So now cash versus card, I already said, go for cash instead of card. In the card also, instead of going for a credit card, go for a debit card. What is the advantage of debit card? Debit card actually drawn from your savings bank account. So there is no question of, getting getting into debt and paying your interest and all that. No accumulation of debt. Whereas with the credit card, it's not your money. So that is the reason why the credit worthiness and credit cards and interest and late payment, all that will be coming up. Let us understand what Bible want to say about the credit and this loaning and all that. The rich rules over the poor, and the borrower is the servant to the lender. Very interesting, right? Proverbs 22:7. The borrower is a servant, is like a slave to the lender. So once you take loan, you are like a slave, you are like a servant to the lender. So that is the reason don't take any loan at all. The rich rules over the poor. So that is the reason be careful. So if you take loan, then it will be like somebody bossing over. And secondly, in Psalm 37:21, says the wicked borrow and do not repay. So that means those people who take money, who will take loan and they don't repay, I say I will repay, I'll get back. So their delay or deny repayment is wickedness. Bible says wickedness. So plan well to meet your expenses. So don't become wicked. So be committed to pay back by all means. Once you take loan, you have to pay back. It takes 20 years to build a reputation and 5 minutes to ruin it. If you think about that, you will do things differently. So as per Warren Buffett, honesty is a very expensive gift. Do not expect it from cheap people. Some people are cheap people. They're not honest. They take money and say, I will pay, I'll pay, I'll pay. But even if the deadline comes, but they still say, I will pay next month, next year. They keep on postponing. So they're cheap people. So they don't have the honesty. So they're wicked people as per the Bible. So 20 years to build a reputation, just 5 minutes to ruin it. So be careful about your commitment and words. So let us understand about little credit card jargon. So they give sometimes, interest free or sometimes a grace period for interest loan, right? Credit card loan. So month one, say this is from this period onwards, you'll get end of interest free grace period. From here month two onwards, you may get into interest. So there are personal loans and also credit card. What is the difference? Credit cards are very, they charge very high interest rates. Whereas the personal loans are usually soft loans. They don't, they don't make you to repay with a huge interest because there is a surety and collaterals are there, like house loan and vehicle loan, something like that, right? So instead of going for, credit card loan, we always go for a personal loan, for business loan and all that. So how the statement looks like? Statement looks like current payment due, okay, current balance, last statement balance, reward balance. They give you some kind of points. Now, payment information, if you see this is a new balance, means this is the outstanding balance you're required to pay, $87. Out of them, minimum payment due is $35. So don't pay only $35. And minimum payment due date. If you don't pay, then late payment warning will come. Late payment charges also will come. Additional late fee of $35. See, minimum payment is $35. Again, late fee. So they keep on charging you. So now delinquency means once you miss out single schedule of payment owed, then it's called delinquent or delinquency. But it will affect the credit score. So I said about credit score, very important. You have to maintain it. So default is something you are not paying. The repayments as per the schedule. So that's called you are defaulted. Then company can, the company or the bank or loan agency can able to take action against you, civil action or criminal action or whatever. everything, whatever they can, they will try to take action. Then you become really slave, borrower, become servant, slave to the lender. So grace period and deferment. As I said about grace period, they give you some period. Afterwards, they end up in interest. Deferment means they defer for some time. So they say, because of so-and-so schedule, so-and-so problem, I'm giving you defer of the interest for some period. After 1 year, you start getting this, after 3 months, something like that. Moratorium means, they after certain for a specific reason like COVID time or because of some, some issue, they consider your request and they postpone the loan payment for some period. So credit card frauds also coming up nowadays. Once you put it in a ATM, they try to forge that, make a copy of that ATM and try to somehow they hack your details and try to draw your money from the credit card. As it is, credit card is a big problem. As added to that, they try to make a copy of it and charge extra money from that. Then it will become more burdensome for many people. Nowadays, frauds are coming up more. So credit card payment tips. Number one, set up automatic payments. In the automatic payments, there are 3 ways. Number one, pay the full amount and pay the minimum amount, pay a fixed amount. If you give option for a pay the full amount, then balance is not there, then problem. So if you ask the bank to pay the minimum amount, then again interest will accumulate. And if you ask the bank to pay a fixed amount every month, then also you end up in long-term debt. So that's the reason you have to weigh properly options before you pay. So set up automatic payments. Number two, consider changing the credit card due date. Sometimes according to your money arrival, how much our money is going to come into your bank inflows, accordingly you can able to change the credit card due date. Pay more than the minimum amount. So sometimes not just to only pay minimum amount, but also try to pay more than that. Pay your credit card bill on time. Use a debt strategy to pay off debt. Consolidate your credit card debt. So instead of having so many debts, so many credit cards, you can able to consolidate. So these are some of the other tips like balance transfer credit cards. You can able to transfer the balance to instead of 3-4 cards, go for 1 card. And line of credit, go for a small soft loan, 0% balance transfer card. So home equity, something like that. Smaller interest rather than going for a higher interest, cards or loans. Number 3, low interest credit cards. There are also look for low interest credit cards and shift from higher interest credit cards to lower interest credit cards. And an installment loan also, sometimes installments will be easy installments, will be easy EMIs. So go for that instead of going for a very expensive, which you cannot able to afford. And renegotiate with the credit card company. Sometimes required, you can sit and renegotiate. Then they may be chances of you getting some kind of concessions. And making purchase on your credit card can often give the illusion that you are getting things for free. It looks like when you are swiping the card, it looks like you are getting the things for free, which is not. So be careful. So take a long, hard look at what you are doing. So make a proper understanding about what you are doing. Is it right in the long run? And make a budget, create a full list of expenses and try to prioritize them. If you buy things you do not need, soon you will have to sell things you need, as per Warren Buffett. So be careful about that sentence. If you buy things you do not need, soon you will end up in having to sell things you need. So very important. So don't buy unnecessary things. That means. So the statement is like this: 1,000 is the balance, means you have to pay. Out of this, 15% is ARP, 1.5% cash back, monthly payment, pay of time, this on month interest charge, cash back, and all that. So now this is how it looks like. Now, how to understand this? Let me explain, help you to understand. Okay. So now this APR means annual percentage of interest, annual rate of interest, annual rate of percentage or annual percentage interest, APR. Okay, so let us say you have an outstanding credit card debt of $1,000 at the end of the month. You have to pay, balance is $1,000. Your average daily balance is $1,500. And the credit card company sets its APR at 16%. These are examples. Now the company will calculate your daily periodic rate or the interest you are required to pay at the end of each day. This is done by dividing the APR by 365 days. So because there are 365 days in a year, in this case, it will be 0.16, that's the APR percentage, by 365 is equal to 0.0044. 3 zeros 4. This is then multiplied by your average daily balance. So average daily balance is $1,500, right? So is equal to then 0.66. Finally, this number will multiply the number of days in your billing cycle. So billing cycle out of 30 days, which is the days. So they say 30 days. Then you have to pay $19.80. Okay. That means 1980 is the extra monthly amount you're required to pay on top of $1,000, right? So if you made a minimum monthly payment of $25, your total repay sum will look like this: $1,000 minus $25 you paid and plus 19.80. This is the that day, calculated APR. So now day to day they are calculated. So is equal to 994.88 cents, right? $994.8. Meaning just now you pay $25 minimum, but still they say you have to pay again 994, as if you did not pay the $25. That kind of loan burden will be. So now with this kind of loan burden, people really become panic and they don't understand how to go about it. Don't accept suicide plans in installments. Sometimes you smoke out of installments. Say every day 3-4 cigarettes, what will happen? Sometimes 3-4 packs, what will happen every day? Like an installment plan to die for the liver cancer, for the lung cancer, something like that. Smoking and alcohol, like installment plan for your death, suicide. So same way, some people have a EMI, installment plan, but it's almost like a suicide plan for in terms of financial suicide, right? So be careful. Next point is, so don't get tempted by the credit card and all that. Read carefully all the clauses, all the interest payments, debt payment, how to ask for some few examples and all that. Beware of hidden traps. There are hidden traps. These are the bonus points. When you spend $1,000 in first 6 days, then you'll get so much $1.5 points for every dollar spent. So then you'll get eligible for the mercantile, travel, actives, cashback, events, and gift card. See, nobody is fool. Particularly credit card companies are loaning agents are not fools. They're more wiser than. So they try to make you to spend more on the card so that they want to get benefited out of this, not that they want to give you free gift. Remember always. So for the sake of these bonus points, people always end up in spending. They end up in trap. So there are hidden charges are there. Most of these perk, this whatever points they are saying, folks, they have a huge cost. So the hotel frequent flyer miles or hotel perks, whatever they are giving, they have a huge cost. Remember, huge interest rates. So be careful. It looks like it's like a tempting. They are giving you free, but behind it there will be huge cost. So you have to be prepared for it. So that is maybe helpful for some people whose bank balance is very good and they can able to have a full control. Those kind of people, this may be blessing. But for most of the people, they end up in trap. Okay. It can also be tempting to open multiple cards to split credit card debt to avoid hitting monthly limit. Sometimes they always say open many credit cards so that I can pay from this card to that card, this card to this card. It looks like tempting, but actually you are ending up more credit debts. Don't accept credit cards even if they offer for free. If you can't handle, if you cannot handle, please don't get one more new card. The difference between successful people and really successful people is that really successful people say no to almost everything. So if you wanted to be successful, say no to almost everything. Very important. Don't accept just like that what will happen. Easy going, no. Be strict about your finances. And Warren Buffett is authority on this in the money management. It is rule number 1: never lose money. So always save money. Don't lose $1 also, 1 rupee also. Why should you lose money? If you accumulate money, only become wealthy. So don't lose money. Rule number 1. Rule number 2 is never forget rule number 1. Means again I'm coming back to never lose money. So much is the value of losing money. So never lose money. Very important to understand. In the credit business, always you end up in losing money. Suppose you say for a housing loan, you take in 50 lakhs as the loan and end up in paying 80 lakhs, okay, after say 20 years. So how much is the last? So 50, you're paying 80 lakhs. So 30 lakhs you unnecessarily paid. You lost money, no? So be careful. So there's a save money and give, construct your own house instead of going on a loan. So just because it looks like, saving some taxes and something like that. So that actually the saving tax component will be less, you paying is more actually. I really found out that, income tax saving is very less, but in the name of income tax, actually end up in paying more money to the bank, to the loaning agency. Be careful about it. So be careful about opening multiple credit card. That's what we are telling. Don't accept credit card even for accounting also. You can do better accounting without it. Some people say, "Sir, it will be, I have a full control of the transactions, whatever doing because I'm swiping." If they are swiping, do it from the debit card. Why credit card? So you want to have a control. So credit card, go for a debit card. Then you may be having control of the transaction. Better is always make a ledger book and maintain like a good old days how they maintain with a discipline. Otherwise, do it with a debit card instead of credit card. So sometimes people use credit cards as ATM cards or gift cards. In that case, that loaning agency will not keep quiet. They charge additional 3.5% as cash advance fee. So now suppose you taken as a ATM from the ATM from the credit card $500, and then end up in paying additional $17.50 as credit, advance credit card statement. So if you don't pay, now you have to pay not just 500, but also now you have to pay $517. And if you don't pay in due date, again interest will come and late fee come and all that. So that's why be careful while using it as a ATM card. And what you can do instead. So be careful about your strict, accounting and go for a zero interest or low fee balance transfer and be careful about control, self-discipline, understand and be educated about all these kind of things. Otherwise, you end up in debts. Building these habits will take patience and continuous effort. You have to be a well-educated person in this. Many people are educated, but not educated in this credit card, credit card loaning for components. We see plenty of horror stories about debt. Many people, even educated people, end up in debt trap. So discipline, education, control, very important. Ask for help to come out of credit cards or loans, not for clearing your credit, not for ask for help. Yes, you have to ask for help to your well-wishers, your mentors. They'll give you some advices, ideas, but don't ask them to pay your credit. Becomes easy. Easy, don't go for easy things. You will never grow. So major money for major things, not for minor things. What is major? Major money, major things, and what is minor? Minor things and minor money. So important to understand difference. For example, you have a daughter. You require to do wedding for your daughter. But when to save that money? Not when she is getting married. You have to start saving the money when she's just born. Then if you can able to see next 20 years, start keeping saving money, small, small, small. By 20 years, you can definitely save the kind of money you require for your daughter, wedding and future savings and all that. So don't be reactive, be proactive. Okay, so always look for important things. Important things are the major things. For business loans, suppose you require to start your business or attend some few trainings, they are major. Okay, minor is like buying a jean pant, and a t-shirt and sometimes dress material, purse and bindis and all that minor. So, but alcohol, cigarettes, TV, entertainment, and vacations, all this comes under minor things. So that you should not spend. Okay, very small things, very minor amount should spend for minor things, major amount for major things, right? So understand what is important, what is not so important. That's called essential, compulsory required expenditure. What is not so compulsory, optional, or need, or what is want. Wants are unlimited, but needs are important. Like for your house to run, groceries, school fees, electricity, fuel, LPG, insurance, cable, internet, mobile bill, maid. Example, these are few needs. What are wants? Swiggy, Zomato, Myntra, Amazon, entertainment, eating out, extra clothing, extra handbags, extra shoes. They are wants. So if you have surplus money, so much of surplus money, then you can go for wants, optional things, but not like a essential. If you fail to plan, you are planning to fail, as per Jim Brown, I meant. So you have a clear-cut planning, budget it well, how much is the income, how much is the expenditure, and you track all expenses diligently and try to see where you can able to save, where you can able to be more wiser in terms of spending. Break it down, write it down for procrastination. Sometimes you just procrastinate. That's the reason why you break it down in pieces, the problem, issue. Then write it down, put it on the paper, notes. Then understand where I can do what, where can I improve myself. Prioritize your expenses, which is more important, which is less important. Proactive instead of reactive. I said about we always proactive. Have second income, third income, fourth income. Multiple incomes always safe. Work for part-time, extra hours. Can you improve your skills so that you can work in some kind of businesses or somewhere? So in our Herbalife, we have multiple income zone, 8 areas of incomes are there. So this is a good area. That's the reason I started. So I started with a government job salary, but initially started working, for asking my wife to work extra because our expenditure is going up. So additional extra income for my wife also earning. I am also but in my wife's part of this kind of Herbalife business, so she has a multiple income. Then I understood I only have one income. She has multiple incomes: retail, wholesale, royalty, monthly bonus, annual bonus, club profit, international family vacation, special bonus. Then I thought, why not we spend more time here so that we get more money? 8 areas of incomes are there. Asking for money is easy, but working hard to earn that money is difficult. So people always ask money. Asking is easy, but returning is difficult. So people are up for easy schemes. So repayment is tough. The moment you repay, then you understand. So there's a principle: never spend more than you earn. Live frugally. Frugally means save more money. Don't buy luxuries first. Buy luxuries last. Okay. Distinguish investment and expenditure. You can invest more, but not expend more. Spend more. Okay, so determine your new lifestyle. Sometimes we increase our lifestyle so lavishly that sometimes we fall down in our own expenditure. So we try to reduce our lifestyle. So ultimately, understand the reality. So if you have so much of money, so much of surplus, then you can see. Distinguish loans with high interest, medium interest, and soft loans. Okay, very important to understand, which is high interest, medium interest, and soft loans. Okay, go for soft loans, small interest, yeah, loans. Start get rid of higher interest cards. Remember, higher interest cards are taxing on the head. Keep an emergency fund. Don't say my father suddenly in hospital I have to pay. So those you have to. We cannot expect anything, but at least keep some emergency fund. What if something happens in the family? Keep some emergency fund. Avoid taking new credit cards. Do plastic surgery of the old ones. Don't loan any money to anyone. As you lose your friend and relative. As I said, if you don't have the understanding about credit worthiness of your friend who is asking you money. So that is an invite. Avoid. Don't give any money. If you give, you have to forget about that money. That if that is the case, then you give. But if it considered like a loan, then what if we don't cannot able to pay, end up in ruining the relationship? At least he is coming now. Later on, he will not show his face also. You lose him unnecessarily. But in businesses, be careful. So it is better to be a lender than a spender. Means you can give, but forget about it. Instead of spending money uh, wastefully. So use empty cans of Formula Ones for accounting. So in our Herbalife, you drink the shakes from these cans, right? So after using, they become empty. So you can each one rename the label and say retirement fund on box, child education fund, house for house constructing, for car, loans, living expenses, insurance premiums, and travel, entertainment, business, fund, something like that. Keep on writing and keep on saving money in that, putting in that. Actually, you are doing opening different kind of bank accounts. You cannot open so many accounts. There is a reason start with this kind of boxes. Then eventually the money is pulled up. Then you can open a bank account separately. So separate it, very important. Separate the money. People lose valuable relationship, lose families over the credits. So be careful about lending just like that, unless because those credit agencies know the credit worthiness. You don't know. So there is a reason why don't give any money to friends or family members, anyone. Just talk to them, give them pocket money, give them food and all that. So next is don't give even upline downline relations. In Herbalife we have upline downline sponsors and all that. So if your sponsor you loan, then usually relations will get strained if you cannot repay. Sometimes product exchange, all that. So that's the reason why we don't encourage anyone, actually discourage anyone to borrow or exchange products or cash or anything. No money dealings with anyone. We just have to give our trainings, our education. We should teach them how to fish, but we should not give fish. Remember, otherwise actually their relations get spoiled. So what we learn from history is that people don't learn from history. Very interesting, no? So history always full of lessons, but people don't learn. They don't want to learn. I told so many people, don't borrow, don't give lending, but people still they keep on doing. They keep on maintaining doing mistakes and they don't learn. I don't know where it all goes. Some people say like a myth. I don't know where it all goes, meaning they don't have any control. If I had a few fortune, I would take good care of it, but I only have small money, small paycheck. So it is not, the answer is more only makes you more of who you are. It's not the more, secret is not in the more. The secret in the small things. You start mastering. When you cannot master, when your salary is 5,000, 10,000, small money, if you cannot control your expenditure and allocate budget properly, then what if your income is 5 lakhs or 50 lakhs? You will ruin. So it is not in the high, in the big things, secret in the small things. I will save money when I have surplus money, which is also myth. Okay, it is not true. Actually, it is not the money at all. Many people they postpone the saving. Poor people spend first. Rich people invest first. Spending is, once you spend, you will not get back. Invest, when you invest, you will get back. So rich people invest first, then they spend. But poor people spend first, they try to save if it is any left. So this is what Warren Buffett advised. He said, do not save what is left after spending, but spend what is left after saving. Very important. So you have to spend first after saving. How much ever save, then if it is anything left, then you spend. See, interesting. We have rich people mentality is totally different. So why training on money management when I don't have any money? Some people say I don't have money only. Say where is the point of money management? Which is also myth. It's not true. So it is not the money problem. It is a plan problem. So it's not, you don't have the problem is not the money problem. You don't have the plan. Suppose your income is 5,000. For 5,000, how to allocate, how much to invest, how much to save, that you don't have. So that is the reason it is not the money that counts, it's the plan that counts. So you require more trainings on planning and executing. So you require, in spite of lack of money or of shortage of money, you require money management trainings. Very important. This is where we learn this principle of 70 to 30 rule. What is 70 to 30 rule? While allocating, so first, suppose your salary is only say 1,000 rupees. Out of 1,000 rupees, live as if your expenditure is only 700 rupees, and rest of 300 rupees allocate it separately. Don't think that is your money. So it is easy in your mind thinking that though your salary is 10,000, you say you have to live in 7,000 only. 3,000 leave it to some other purposes. What is that you are going to do with the 30 rule? 30 means the first 10% give back to God, charity. So 10 next second person, so 10% you have to give for savings. That means you are not going to remove anything. That keep on accumulating and law of accumulation starts, following. Last 10% for investment. You invest in cheats or invest in mutual funds or invest in real estate, wherever, whatever available. Okay, so but allocate certain point. So that means you should not live on the rest, last 30%. So first 70% only are supposed to live. The 30% allocating for different reasons. Slowly make it 70 to 30 to 50 to 50 to. Then make it reverse. So eventually make it to 30 to 70 means you have to live on the 30% of your income and all the 70% for charity and savings and investment. That's what, start becoming more wealthy, start making more money, returns will come back. Respect money by organizing your wealth well. This is one more principle. So if you respect money by organizing, classifying how much is the gold, how much is the fixed investments, how much is the insurance, how much is the jewelry, everything organized, gold, silver, cash, real estate, bonds, shares, insurance, everything, postal deposits, whatever you have. So organize well in time. How much, what is the things, your worthiness, net worth, try to work on your net worth. Even if your purse is there, don't throw all the money there. Classify and keep it. Where is the coins? Where is the notes? In the notes also 1,000 rupees one, then 500, then 200, then 100 rupees now, then 50 rupees, like that, and organize in a proper way so that you have a control. It's not the money, it's the control, it's the plan. So what gets measured gets improved as per master, Peter Drucker, father of modern management. If you can measure it, you can improve it. If you cannot measure it, you cannot improve it. So that's why you have to start measuring everything. How much is the investment? How much is the spending? And assets and liabilities. I'm going to talk about it in a few minutes from now. Borrowing and lending, already said. What is depreciating? What is appreciating asset? Suppose you buy a car. Now it is 50 lakhs. After the moment you bring it out of the showroom, you know how much it will be? That 50 lakhs car goes to 40 lakhs. After 1 year, it becomes 30 lakhs. So the asset is becoming depreciating. Whereas if you invest in a land, if you buy a land piece, it start accumulating, it will start appreciating its value. It's called appreciating asset, right? So let us understand about this economic terms called what is balance sheet. Most of the poor people, they don't understand balance sheet. What is this balance sheet? So this is the income statement and balance sheet. In balance sheet, something to do with the assets and liabilities. So assets give income. Remember, this is simple. A liabilities generate expenditure. Now some people have confusing jargon. Assets, your vehicle, they think asset. It's not asset, two-wheeler or four-wheeler. Why? From that, you are not getting money. Money is going from your pocket. If money is going from the pocket in terms of petrol or diesel or maintenance, then it becomes like a liability, not an asset. Mistakenly, some people mistake. I take a house loan and I live in that. So they think it's like asset. No, asset is something, it keeps on giving you money into the pocket. Okay. The asset, you have to understand financial jargon very carefully. So if it is a real asset, it will give you income. If it is liability, money you lose. It actually end up in expenditure. So what is income statement? So the income statement is this one, the financial education income statement and balance sheet, income and expenditure. What all the money inflow to the pocket, all income. Expenditure is what all you spent it off. Okay, payments you have to give back. Okay, assets and liabilities. Liability is something you have to compulsorily pay back. Assets means, I said, remember, they will generate money into the pocket. So stocks, bonds, notes, real estate, business, intellectual property, etc. Now, how the poor live? Let us understand about income statement and balance sheet. The poor, they only have small incomes and small expenses in terms of income statement. In balance sheet, assets are zero, liabilities are zero. And most of the time, the poor, they spend, and that money will go to the wealthy people. Suppose they went and buy a jeans pant. So that will go to that rich people, that they own the company. They buy a TV, so that will go to the TV owner, they pay some internet, so they will go to the internet company or internet. So usually the wealthy people take the poor people's money. So that's how it goes out. Income, and they actually increase the expenditure. Most of the people, poor people live this way. How the middle class live? They buy expenses and liability. They think they are assets. They're confused. They consider they are assets, but actually end up in liabilities. Example, I said, remember, house loan, car, two-wheeler, and all that. They just now got a job. Immediately they bought a two-wheeler. Immediately they bought a car. I'm not telling don't buy. If you have surplus money, you can buy. But they consider them as assets, which are not assets. They are actually liabilities. Okay, I'm not telling don't buy a house. You can buy, you can build a house. But money, where it is coming? You end up in paying, for a whole year, 20, 30 years loan. So they think you're asset, but after 20, 30 years, actually, maybe land price may increase, but immediately that money is not coming to your pocket, right? So that becomes like a liability. You have to keep on servicing that house. You have to keep on paying a lot of money to the house, modeling and sometimes maintenance and all that. If you give it for rent, then it becomes like a asset, right? So that's what you have to understand. So middle class, they get confused. Their incomes are smaller, expenditure more. They end up buying liabilities and they go into the wealthy people. So this is how middle class balance sheet and income statement. Then how the wealthy live. The wealthy always think and act like rich people while dealing with money. So rich people always have a different kind of principles. I'm not telling they are good. I'm telling they, in terms of financial principle, they follow certain proper principles. They reinvest the money generated by the true assets. Time is money for them. They don't waste the time. Time is more valuable than the capital. So they really work hard, they don't waste time. So how the wealthy live, they take the income of the poor and middle class and buy assets that produce more income. So their income, wealthy people always income, they keep on moving. So they end up in more income generating works, right? So expenditure, they try to limit as much they can. Balance sheet, the assets will be more, liabilities are less. That's how wealthy people live. So they take more money from the poor and middle class and that come into their income, and they buy more assets. With that assets, again, money will come back to them. So that's how they become rich, how the wealthy live. And now I understood their income statement and balance sheet. So this all I also don't know. I learned from Rich Dad and Poor Dad book. The schools won't teach you this, unfortunately. Poor and middle class and rich, how the liabilities and all. There is a book, Rich Dad and Poor Dad, by Robert Kiyosaki. Please go through it. Or also you can go through this book also, Cash Flow Quadrant by Robert Kiyosaki. Very powerful books that will change your mindset about money and how you do it. So business owner, employee, self-investor and all that. The concept of leverage. Leverage means you have to, all the rich people, they hire some people and, upon them they pay some salaries, and upon their time, they try to make production and they try to make more profits on them. So it means to become rich, they have to take a lot of people's help. That's called leveraging people's energy and time, right? So that's what they do in business owner and investor. Whereas in employee, self-employed, no leverage. So the more you leverage, more passive income, more residual income will come. So please go through this Rich Dad Poor Dad book, and a lot of lessons are given here. Now turn income into financial investment, that investment into financial independence. What is financial freedom? Financial freedom is the ability to lead life from the income of your own personal resources. Nobody's having any claim on your life. You can get whatever you want. So that's my goal. That is happens to be your goal, and everybody's supposed to be everybody's goal. Financial freedom. Never depend on a single income. Make an investment to create a second income, second source, third source, more incomes, multiple income zone. That's what we are talking about. If you don't find a way to make money while you sleep, you will work until you die, as per Warren Buffett. Meaning, you while you are sleeping, also you have to make money. That kind of business or job you are supposed to do. So if that is kind of job or business you're not doing, then you have to work for all day long till you die. Okay, that's where I'm talking about leverage, smart business. I'm not saying don't do hard work. You have to do hard work, no doubt about it. But also learn to leverage, do smart work. The best investment you can make is an investment in yourself. The more you learn, the more you earn. Really, I don't know all these things. I did my MS in zoology. I read a lot of books, anthropology, sociology, physics, chemistry, biology, all that. But I don't know really this money management, business management. I learned all this. I learned on myself. I worked on myself. I read a lot of books. I underwent a lot of trainings, right? Then when earning actually started the learning. So let me give you my example. I come from simple middle class background and leading simple ordinary life. Though I got a big job, but my salary was less and my clothes and everything middle class. So then I got into assistant inspector general of registration stamps. I was eating a lot and then don't have time to exercise and drink a lot of tea coffees, and I became like this. You can see the white shirt there. Okay, so and as a district registrar, field officer, I worked as a worked in Khammam, Nalgonda, Vijayawada. So you can see the busyness, busy officer, and known to a lot of VIPs and a lot of responsible job with my subordinate officer. I was a quasi judicial officer post, you know. So, but unfortunately, salary was less, but working very hard. And I came for my wife. She wanted to earn extra income because salary was very less. So that is how we started. And in the process, she come across this kind of wonderful products, lose weight, and also started lifestyle changes and exercise and all that. And you can see the transformation. And before coming to Herbalife, she was very fat, and we had taken her to twice to basically nothing happened. And she lost weight, and I also lost weight. We are looking much better, and our children also now into fitness and nutrition. I'm a full marathon. I do marathon running, 42 kilometers running, and my children grown taller. My wife and me, we became slimmer, and we start teaching people whatever we learn. We teach people. So as a health coach or wellness coach, this is what we do. You can see me in blue t-shirt, green t-shirt, So my background is totally different, but I learned these skills, how to become coach, how to become wellness coach, health coach. And Cynthia from housewife to now she turned into businesswoman. And we really love helping people. Okay. Because I came from small background. I understand many people also like me. So they also come from simple background. Nobody is there to teach. So I thought this is the wonderful area where I can really touch people's lives. I can change their mindset, and they can also be earning money, also earn money on them. So teaching fish is better than giving fish. So in government, usually we used to give fish. So they eat and again move around the officer. They say, "Sir, money again I lost. Can you give me back money? Give me some government, freebies and all that." So we give, government always gives, okay, but we don't teach in the government, because to teach I also should be the businessman. No? We are employees. We also don't know how to earn money. So now this is where we are doing. We are teaching people how to fish, where we don't give any money, but we teach them how to fish. That's where important part. And we also go into corporate companies and we educate them on health and different components. And this is where here we are surrounded by a lot of people. Each time we get a lot of blessings because we train them, we educate them. Now, where I was government officer as administrator. Now, a leader. Leader is something. Lead by example. We first understand ourselves. We try to discipline ourselves. Then we follow certain things. Then we teach them. Cynthia recently got award Woman for Gold in Telangana. And this is what Jimran, my mentor, says: for things to change, you need to change. For things to become better, you need to be better. So I started changing. I started becoming better. And Bill Gates says, if you're born poor, it is not your mistake. But if you die poor, it is your mistake. Interesting statement, right? So I born poor, yes. Middle class and poor background, middle class background. But dying, I'm not dying as poor. I'm not dying as a middle class. So if I die, it's my mistake, right? So God given this kind of opportunity. So why don't you take advantage of it? So if you want to become a wellness coach like us and also on extra income, please join us, contact us. Or if you want to have a personalized plan for you on diet and fitness and lifestyle, please do contact us. If you already have a coach, please don't call me, don't come to me. If you don't have any Herbalife coach or any other coach, then you contact me. These are Instagram, Facebook, website, and YouTube, and email and phone numbers given. Thank you for your attention. And our goal is, and your goal is, making the world healthier and happier. This is what my goal. So if you like this video, please put a like button and share this video to some people who maybe they may be blessed through this video. They also may be suffering because of nobody there to counsel them or help them. So forward this video and share this video and subscribe to my channel. And if you really wanted to become part of our family, then if you don't have any coach, please do contact us. We are more than happy to help you. Wish you all the best. God bless you. Thank you so much. Bye.